All right. Uh, Concentrator, what were you saying? I'm sorry.
No, I just didn't know whether or not I had the fib tool on my 5 minutes, and I just didn't know whether it had more relevance on higher time frames or whether
It does.
it does.
Everything does. Yeah,
Okay.
everything does. Every higher time frame has more. Okay, so this is a way to look at it. So higher time frames have a much more significant impact, and then lower time frames will help you, one, get in on those higher time frame moves more quickly and more accurately without having to just like, you know, put it in a spot and be like, oh, hope it works out. We can kind of use those lower time frames to give us kind of confirmation that our idea, our point of interest on the higher time frame is correct. And then another way to look at it is the lower time frames are more accurate as well. But the thing we got to keep in mind is this. I'm gonna refer to a drawing that I made that I know several of you have seen something quite similar, but I know one or two of you haven't. All right, so concentrator, you see this dashed line right here, this one that just goes diagonally right through there.
Yeah.
Okay, so imagine that is your weekly time frame impulse up. Okay, you understand?
Yes.
Okay, now the green line, the solid green line, this one, imagine that is your daily trend up. All right, and now the blue line, that's your 4-hour uptrend. But what do you notice about that 4-hour uptrend? Like there's pullbacks, right? Like you have these little moves down, these pullbacks, and then it goes up, and then it pulls back, and then it goes up, not breaking this high, and then it pulls back, it breaks that low, and it pushes back up, and then it comes down, but it holds this low, and then it breaks this. So this right here to this on the 4-hour is a break of structure, right? Comes up, and then now we know this is a strong low on the 4-hour, and it comes down to about the EQ. Like if we were to measure from there to that high, like, damn, I got that almost perfect just by eyeballing it. It comes down to the EQ, and then it moves up, and the same thing here. If we measure from that low to that high, it's comes just a little bit below it right there to the EQ, and then moves up. Okay, so that's our weekly, our daily, and our 4-hour. Now the pink line is our 1-hour. So now we can look at this pink line. It comes up, it comes down, up, down, up, down, up, down, so on and so forth, all the way through here. Okay. So there's many uptrends and downtrends on the 1-hour that overall in the weekly, it's just an uptrend. The same with the daily. We have a little pullback, but it's still in an uptrend. Okay. Now, if we look even more acutely, the 15-minute is this little yellow dotted line right there. Okay. Look at all the ups and downs of that, the trend breaks, and don't scrutinize these levels too much, y'all, because this is really time consuming drawing all these little things and the way in which they're drawn. So this one should be, yeah, there we go. I'm just going to leave it there. We're going to run with that. So this little yellow line, that's the 15-minute, and look at all the ups and down trends in that. So this is what I'm saying about we need to know what the higher time frames are doing, because let's look at it like this. All right. Let's say I open my chart up. Okay. And let's just imagine everything from this dash and the fractal multi-time frame right there in the middle of time and frame. Let's just imagine none of this exists yet. Okay. Now I'm in the move like right here, and I'm like, okay, yeah, this looks like a good short right, right here. So I'm like, all right, yeah, it's moving down. Let me snap that to the right level. Man, I'm just gonna have to roughly put it there, right there. So let's just say I think this is a level to short because, like, oh, it's coming up. And then look, it's coming down on the 15-minute. If I'm only looking at the 15-minute, it looks like it's going down. But what I got to keep in mind is what the higher time frames are doing, because the weekly is just going up, right? The daily is pulling back. Yeah, it's going down now, but I need to find out where's the most likely place that daily is going to bounce off of, so I know when to exit time frames below that if I'm going to trade using those. All right. That's where that fib tool, the way in which I use it with the 25, the 50, the 75 mark, comes into play a lot. Now, if I get in on this right here and I just short it and I swing for the fences, I'm like, oh, this is going 100% down. We're going down to $2,000. And I don't keep in mind these higher time frames, it works out great, right here. Oh, it's good. Oh, no worries. It comes up. Yeah, I expected it to do so. Oh, it's coming up a little bit higher. And then bam, what happens? I get stopped out because my stop is right above that, right? So I get stopped out, then it comes back down, and then it just continues to moon. Now, if I were to plan my trade accordingly, and I were to put it, let's say here, all right, and I come up and I get in here and I have my stop above there, but I know what these higher time frames are doing, and I have an idea of where it's going to pull back and impulse back up. I'm taking profits through here, right? Like, I'm not just like crossing my fingers and saying, I hope I get 100%, you know what I'm saying? Or 300 or 500%. I'm removing my risk as soon as I can on a counter trend trade. Counter trend means I'm going against the grain. Now, if, let's just say I wanted to long, and then I long here, let's say here, okay? Let's say, it's not quite the place. Let's say I want to long here when we're at this part in the move, and it comes up on the 15-minute and the 1 hour and the 4 hour, comes down, but it doesn't stop me out because my stop is right below that. I'm good to go. I can let that ride out. My expectations are higher because I'm pro trend, right? The higher time frames are in my favor. And that's where the saying comes from, like, the trend is your friend, uh, which, I hate repeating those kind of things, but it's really important, and it's very applicable, but it doesn't mean that we can't trade against or counter trend. It just means we need to adjust our expectations, and we need to know what each time frame is doing and where it's at, because ultimately the higher time frames are really going to dictate where the move is going overall. Now, that doesn't mean that, oh, because the daily or the weekly is in an uptrend, that it's going to stay that way, because that simply can't be the case. Otherwise, we'd be in a perpetual up or downtrend indefinitely. You know what I mean?
Yeah.
So I think that's, the whole fractal part of things, it's one of those things that I think it's hard to teach or be taught. And it's something that I'm certainly still working on, like fully, like I understand it, right? Like I understand it like fully, but it comes where the rubber meets the road, is the saying we have here. Like what really matters is you can know things, but are you able to apply it in an efficient way, and in the case of trading, profitable, right?
I mean, I can see where you wouldn't take a short, and where you would, base
Right.
your decisions on the higher time frames rather than just looking at the lower time frames.
Yeah.
Where you might want to
Yeah.
jump out as a day trader, maybe.
Mm-hmm. And you use them both, right? Like you wouldn't want to just trade, especially if you're a 50 plus X trader. You don't want to solely trade like the higher time frames. Now, if you're a 2X trader and you got $1 million account, you don't really need to look at anything other than like the daily, the weekly, the monthly. If you're not in at a rush, you can just be like, I'm going to wait for the daily to pull back, or the weekly or whatever. And you see it past the EQ of the range, and you're like, yeah, this looks like a pretty good spot. It can go 10% against you, and you're like, I'm good, which is what a lot of like people do, especially on YouTube, and they have these super low liquidation points of like, when, for instance, when Bitcoin was at 50, 60,000, they were in longs and their liquidation points were like 3,000, 7,000. I mean, there's dang near no risk of it going to that anytime soon, right? Like it could, but it's not going to get there quickly. There's plenty of things to hold it up. And then they just kind of wait for things to work out in their favor. And then when they do, because we're in a bull run, and they're like, oh, look, I made $1 million and put $2 million into this trade or whatever. But I had to wait 8 months for it to work in my favor. And there was plenty of ups and downs, because if I only long this spot right here, right? If I just long this and I'm waiting for this, look at all the trades I missed in here. I could have taken this, this long, got out, this short, got out, this long, got out, so on and so forth, and all the ones in between that. So that's where skills involved. And I think that's where one of the things where we're talking about a video on like how to find a quote unquote mentor, which I hate to use that word, but and I'm certainly not saying I'm one by any means. My point is like, that's one of the things that I would personally look for, is how do they trade, right? Like, do they trade with a massive amount of money on very low leverage, with these very low liquidation points? That's one of many signs I would kind of look out for, and we'll kind of go into detail on that when we make that video, but I thought it worth mentioning just the way I kind of see things. And I'm sure, several or most of you kind of agree with that, because we've all kind of fell victim to the whole smoke and mirrors or sleight of hand type thing. Like, hey, yeah, like I'm this or I'm that. Look over here while I do this over there. That kind of stuff. So question everything, question everyone, shit, question me for sure. That's my advice on that kind of subject for right now. But I got a lot of opinions and thoughts on that whole area to be sure. But do you see what I mean, conscious trader, about how easy it is? Because imagine yourself right here. Okay. I wish it wouldn't do that. I wish it wouldn't highlight all the points, but imagine yourself right. Let me just get it right there. Imagine yourself in the move right here. Yeah, it doesn't cut off the drawing. I hate that. So if you're in this move right here, right, and none of this over here has happened, okay, and you just watch this happen, you're like, oh yeah, it's going down, and we don't see the green line, we don't see the blue one, we don't see the pink one, we're on the 15-minute, okay, so all we see is this yellow dotted line. And I can, easily kind of hide these just to make my point a little bit more clear. I'm just going to hide these two. Let me just hide that one. So let's say maybe we see the hour and we see the 15-minute and we're planning our trade off of that, right? And it comes up and we're like, oh yeah, this is going down right here. We're in a downtrend. But what I failed to realize is that we're in an uptrend on those higher time frames. And if I get in mid pullback, because this is a pullback can be down and a pullback can be up. Like, don't confuse that. They're the same thing. It just means counter or pro trend. So if I try to get in here on a short, and it's like, all right, cool, I got in, I didn't get stopped out, maybe this was my stop, like right there, and I get in and it's like, all right, cool, yeah, oh, I took out this low, I'm doing good, oh, I took out another low, but I get greedy, right? Like, I'm like, I don't want to take profits, because we always think about like, well, man, if I take half my trade out and it goes up another 1%, I'm going to make half the money I could make if I left it all in. That's a trap that will never, ever, ever pay dividends. It may, but I promise you it won't over time. It won't. I'm telling you, it will not pay dividends over time. It just doesn't work that way. So we get in a short, we get greedy. We're like, oh yeah, it's definitely going down, definitely going down. It's okay. We took this high out, little change of characters are, they're weak. They're just one little sign, then it comes up, we make a high, then it comes down, holds that change of character, and then boom, blows up, stops us out. And we lose our stop loss money and all the profits we could have made. Like we could have made, we could have made, 30% on this graph that I have drawn here. Whereas if we would have taken profits and taken them at key points back here, you don't got to take a lot. I'd say remove risk as soon as possible. So if your stop is 5% of your position, when you can make 5%, take it off, remove it. I don't really recommend adjusting your stop loss, because it depends on where you get in, I guess. But oftentimes, I know most of y'all have seen, you'll get in and it'll come down and go in your favor, and then it'll come up and it'll hit your stop, and then it'll go right the way you thought it was going to the whole time. And that's because you got in a spot that they knew people would get in on, and they used that to their advantage and your disadvantage. So I think that's really important to recognize. So if you have to adjust your position size or, risk amount to do the things that you need to do to make it more favorable for you long-term, do it. It's not about what you make in a trade or a day or a week. It's about what you make in a month or 3 months or 6 or a year or 5 years. Don't be so short-sighted. And I don't mean that like, in an insulting way, because it's certainly something I've been guilty of many, many, many times. And it's been a hard lesson for me to learn. And I just, I've tried my best to help other people see that as well.